In examining the impact of recent actions on AMC and the potential for manipulation, an intriguing perspective emerges from an insightful Investor Place article. Typically, stockbrokers levy mundane fees, but this particular article posits that the balance of shares available for borrowing at a lower rate may have inadvertently triggered institutional investors to maneuver and augment the supply of shares, ultimately aiming to reduce borrowing fees. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's delve deeper into the mechanics. Brokers impose borrowing fees when short sellers take positions against a stock. When these fees are elevated, shorting a stock becomes costlier for sellers. In the case of AMC, the article emphasizes that borrowing costs were already exorbitant. Faced with this financial challenge, institutional investors sought a workaround. The high borrowing costs potentially prompted them to advocate for lower fees, leveraging the existence of tokenized AMC shares to facilitate the availability of located shares indirectly. The essence of their strategy involves institutional investors creating an equivalent of actual securities through tokens. By presenting these tokens to brokers, they questioned the rationale behind imposing a 1,000% fee when additional shares were readily available. The article, citing a chainsaw report, noted a substantial number of tokenized AMC shares that could be borrowed, traded, purchased, or sold on the market, influencing the stock's price dynamics. Speculation reached its peak between August and early November, with borrowing fees averaging a reasonable 18%. It's important to note that this wasn't an astronomical figure, but a manageable cost for institutional investors. However, the situation took a dramatic turn after November 8th when borrowing fees surged to a staggering 55%. Crucially, this period coincided with revelations from FTX CEO Sam Bankman-Fried, who disclosed the exchange's insolvency on November 8th. The chaotic environment not only affected the traded tokens, but also raised questions about FTX branches in Europe, particularly their involvement in trading within German brokers and executing transactions in Switzerland. The Chainsaw Report hinted at potential investigations into the wallets of FTX, the storage of coins, and the whereabouts of customer funds. While these issues loomed large, it's perplexing that reports and articles failed to connect the dots between tokenized AMC shares in the market and the potential involvement of institutional investors who were shorting the stock. Instead, the emphasis was on arguments with brokers about high borrowing fees, without exploring the possibility of institutional investors actively engaging in the tokenized market. The correlation between the excess of tokenized AMC shares and the demands placed on brokers to lower borrowing fees remains a focal point. Why pay exorbitant fees for traditional shares when tokens, possibly sourced from platforms like FTX, could provide a cheaper alternative? There's also speculation that these tokens might have originated speculatively, further complicating the situation. Crucially, the Chainsaw Report revealed that, to issue tokens, they needed to be backed by real AMC shares. Yet the first audit failed to locate these shares, introducing additional complexity and uncertainty into the narrative. With numerous gaps in information and conflicting reports, it raises questions about the reliability of the channels through which this information flows. Ultimately, the brokers may hold the key to unraveling this intricate web. According to reports, brokers were the ones highlighting the increased supply of the particular stock, which they argued should result in lower borrowing fees. As the complexities unfold, it remains to be seen whether a comprehensive audit will shed light on the actual transactions, the legitimacy of tokenized shares, and the role of institutional investors in this convoluted scenario. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching,